Ladies and gentlemen, welcome back to the channel. Today, I'm going to be talking about the housing market forecast and what I think is going to happen in the future with real estate prices. So let's get into it right away. My prediction. I had a prediction back in 2020, and this was when everybody was telling me not to buy a home. Okay. Uh, they told me, everybody was saying, you're crazy, you're putting your financials at risk. It's 2020. Or in the middle of a pandemic, you should never buy a home. Prices are going down, they're crashing, it's happening just like 2008. The data did not make sense to me. I said, nope, I don't believe so. Bought a house, and it went up probably about 40% in value ever since then. And even with higher interest rates, it hasn't dropped. That was my first prediction. As we went along, more, the market kept getting more expensive and more expensive. And I've been predicting that, hey, prices are going to keep going up as long as interest rates are low. And that's what happened. We have in 2021, I kept saying, hey, now's a great time to buy. Even though prices are up, we're still at very low interest rates, so your mortgage payment is going to be low, so it makes up for the difference, right, for the higher price range. Now they're stuck at the same price range, but with way higher interest rates. Instead of 3% on your mortgage, you now have to get an 8% mortgage. In 2022, that was right before we had a correction of about 10-12%. I said, look, it was about January, February. I remember doing a live stream, and you can go back onto my channel, my main channel, and you can see on there all my live streams of what I was saying during that time frame. So I'm not just making this up. And I said in 2022, well, if interest rates go up, which is what we are expecting to happen, we should see a softening market, which means prices are probably not going to keep going up anymore. Maybe go up at a small rate or even correct downwards, depending on how high the interest rates go. And that's exactly what panned out. There was no market crash, nothing crazy. Prices have adjusted about 10% ever since the interest rates went up. Now we're at 8% and prices are stable, actually trending up ever since January. And that was my prediction also last year, where I said, look, at some point it's going to level out and we're going to be accustomed to having higher interest rates and prices are going to keep going up. This is all recorded. It's still online. I never deleted a video, so you can see everything that I mentioned back last year. Now, if you guys have been following me on my main channel, you know that that's what I've been saying. Obviously, what do I think is going to happen in the future? I'm going to tell you what I think is going to happen in this video towards the end. But first, I got to explain why I think things are going to happen. Because at the end of the day, I don't have any magic ball that I can see the future where, I can see what's going to happen to home prices. This is just me interpreting the data and making a logical decision on what's going to happen in the market. If this hurts you because you can't buy a home or because you feel like this is not what is convenient to you, don't blame it on me. I know you're going to hit the dislike button. You're going to leave a mean comment. That's okay. Leave it down there. Let me know what you think. That's okay. But don't take it that way, because I'm just telling you the truth and interpreting the data. And the earlier you guys realize what I'm saying is right, or that it makes sense, the faster you'll be able to make a decision and pivot in your life to adjust your buying criteria, whether you're going to buy a house or not. And that's very important for all those people out there. That's why I'm making this video, to try to keep you informed on what's happening out there with data. So yes, I was right about this correction. Correction happened. Actually, went a little bit more than I expected. I was expecting about a 5-6% correction. We had a 10% correction here in Clark County. Nationwide, it was about 7%, maybe 5-7%. Right now, that correction kind of bottomed out last year, towards the end of the year. Right now, year over year, we're only 1% negative, which means that does not mean we had a real estate crash. Also, 10% is a correction. It's not a crash. A crash, I would say, it's about 20% or more. So, and that is after they increased interest rates by 5 basis points, which is huge. That means from interest rates from 3% to 8% is where they went. Now, we're here, and we have to figure out, okay, what's going on. First of all, I'll show you on the data pretty much what's happening out there. So, You look at home prices here in Clark County, you can see the black line is actually 2022, 2021 is the orange line, and the blue line is this year, 2023. So orange line, this is 2021, prices were going crazy. 2022, prices kept going crazy, and then we had this correction right here, about 10% correction. Now, ever since the beginning of the year, home prices trended up also. Obviously, seasonality plays a big role in this one. We had the summer that was crazy, and then we have pretty much a level off. And I would expect here in the winter to price it kind of settle down a little bit, not by much, maybe 2-3% down max, to then start going up again next year, just like every other year that we see here on the map. That is the median sales price right now. The median sales price for the 30-year, for a house here in Las Vegas is $415,000. As you can see, year over year, it says it on there, 1% year over year negative. But I would expect these prices stay kind of stable, and then right here in December, we're going to see year over year actually prices go up, because now we are past this correction that we had. And we're about 5% down from the highs that we had back last year in 2022. So prices still pretty stable. There hasn't been any crash, 40-50% crash that everybody has been talking about. That's just because they've been fear mongering people to give you the idea that, because fear sells. At the end of the day, they get more views on their channels and you eat it up. Anyway, at the end of the day, what it comes down to is the amount of homes that are on the market versus how many people are buying a home. So that is simply said, supply and demand. So if you need to see a crash, if you want to see a crash, like you're saying, this is what's going to happen. There has to be a flood of homes coming on the market, because people are going to say, well, prices are going to keep going down. I'm going to put my house on the market because obviously we are going to have a market crash, so I need to get rid of my home, and I need to get rid of it for a discount. And that's what's going to cause the market to go down. However, have we seen that happen? No, that's not the case. And even though interest rates have gone down so much, we saw it happen from obviously last year, where we had overinflated prices and people were just going at it, just buying homes as soon as possible. Then we had that kind of correction because all those people got out of the market. We had all the people that owned the house that wanted to list, that were ready to sell, figure out, oh shoot, I better hurry up before interest rates go up and I can't sell my house for as much as I wanted anymore. And then people started selling a bunch of homes, and that's why we had this correction. But right now, people realize, hey, look, I cannot sell my house. I have a mortgage interest rate of 3%. I'd rather just keep it, put it as a rental. That's people are becoming landlords because it makes sense. You have this such low payment on your property. You don't want to get rid of it because it makes you money every month. So keep that and maybe buy another house, taking out even more inventory from the market. But this is what the big institutions are not going to tell you. And I don't know if it's a conspiracy theory or something like that, but what I think is the big money behind the scene is trying to push the agenda that prices are going to fall. And that way you can sell your house, and the big institutions that are purchasing the homes behind the scenes are just wiping out all the middle class that we have here in America, which is causing right now home prices to stay stable because the buyers are still there, investors are still there, buying cash, and then people have to go and rent, making people even more poor in the long term because they're going to be subject to inflation right now. And when they try to get back into the market, it's going to be way too late. And that's the big reality of the situation of what the big institutions are not telling you, because they're telling you, market's going to crash, interest rates are going up, prices are going to go down, you should sell. That way they can buy up more inventory and they can get rid of it. That way when interest rates do go down, good luck trying to buy a house. And that's where that's going to be part of the final prediction I'm going to make at the end of the video of what I think prices are going to do after. Now, interest rates. Obviously, that is a big role. That's what's playing a big role on keeping prices from going crazy. That thing that people have to understand is that people are not going to sell their house if they have a low interest rate. but they're also not going to buy their house, a new house, if they have a high interest rate. So, well, if there is a high interest rate that they have to pay. But if they have a low interest rate on their current mortgage, they're not going to sell it either. So no supply coming on the market, no buyers coming on the market. It's going to kind of level out the supply and demand curve, which means prices are going to stay stable. Unless you see some crazy, we're not going to get what happened in 2020, in 2008, with all the mortgage, fraud that was going on, where anybody, whoever could fog a mirror could get a home. We're not going to get that. And we're not going to get also people just going and selling homes from foreclosures unless there's a big recession, a big problem in our economy. And then you probably have to be worried about other things other than buying a house or trying to have real estate, because you're going to be in a way worse situation, because we're all going to lose our jobs. There's going to be a depression if prices were to go down. But I don't think we are in that spot, because we can. If there is a depression, the Fed is just going to drop the interest rates, which is going to inflate prices even more, if you think about it. So that hypothesis is out of the question too. Now, interest rates. We also see the people that own homes. All the homes of the people that own homes, 40% have a mortgage that has already been paid off. 40% of people. Now, I believe it's like about 70% have 4% or less interest rate on their mortgage. I think it's like 60 or 70%. 80% is below 6% interest rate on their mortgage. So if you have an interest rate below 6%, are you going to sell your house? Maybe if it's under 6%, but if it's under 4%, which like 60 to 70% of people out there, you're not going to sell your house, because you're not going to give up on that interest rate. Therefore, you're not going to give up on that low mortgage payment, which is what's suppressing the market as far as the inventory coming on the market. And it's keeping prices up. And if there is some kind of depression, yes, people are going to lose their jobs. But interest rates might go down and they might stimulate the economy again, which is going to inflate prices even more. So that was pretty much my logic on this, the data of what homes are, interest rates are on current homes that are owned, and all of that. But we don't have any ARMs. Any ARMs are adjustable rate mortgages that we had in 2008. So we're not going to get that inventory coming on the market. So we're not going to get any inventory from the current people that own homes that have these low interest rates. At least the vast majority of them are just going to stay put in there, which is going to also decrease the amount of buyers, but again, it kind of evens it out. And foreclosures, it's unlikely, in my opinion, unless there's something really big that comes on that happens. But again, this doesn't change our theory that in order to get a crash, we need to have more inventory. And there is no other way. And every time I ask all those people out there that put in that comment, oh, price is going to crash, they have no answer to this, which is, where is the inventory going to come from? And you look at them just fumble and trying to figure out something. Yeah, foreclosures and blah, blah, blah. But there's no substance to it and no logic to what they're saying, which is the main problem, in my opinion, with their theses that they have. Now, two things can happen here. Interest rates either go up or interest rates go down. We've seen what happened when interest rates go up. Prices might correct. They might correct a little bit more. It might adjust a little bit, but that's what's going to happen. Adjusted by seasonality, obviously in the winter, we're going to have, right here, you see this seasonality right here of prices kind of going up. And then in the summer, they kind of with prices going down in the winter versus the summer, they usually tend to go up. So seasonality is going to play a role on the prices. However, what's really going to dictate what home prices are going to do is the interest rates. And there's two things that are going to happen. Either interest rates keep going up, suppressing even more the market and all the people that are trying to buy, which is going to keep inventory low and buyers low, prices up, however, and maybe stable or going up 1 to 2% per year, or you're going to have interest rates go down. Imagine what's going to happen if interest rates were to go to 3%. It's going to be insane. Expect if you were to buy a home right now and interest rates go up, expect to get rich on paper, at least as far as equity goes. Because if you own a house, you're going to be in a really good position. Guess what? You can refinance your loan. Oh boy, you're going to have the best terms possible on your interest rates, very low mortgage rates. I mean, if you own multiple properties, you could retire if something like that were to happen, right? Or interest rates go up, and then you have obviously higher payment for a longer time. Those are the two options are there, right? But if interest rates go down, get ready. It's going to get insanely competitive to try to buy a home. You thought 2020, 2021 was crazy. Wait and see what happens if they drop rates down to zero. And here's my prediction for the long term. So short term, interest rates, I believe, regardless, within the next 1 to 2 years, we're going to be stable interest rates. We might drop another 1%. Maybe interest rates will go down to 5-6%, which is going to bring prices up, I would say, on average 3 to 6% per year. That's my prediction. If something happens, and at some point something is going to happen, I don't know when, but I think something's going to happen. Interest rates are going to go down. That's when things are going to go crazy. The real estate market is going to go nuts. Get ready for that, because that's when you have to jump into the market. Most likely, most people are going to jump in then, because that's just the nature of our brains, how we're wired. But if you're smart enough and you can afford a house today, it's probably a good idea to buy right now. But that depends on your situation. Lastly, long term, 10 years from now, I believe within the next 10 years, we're going to have negative interest rates. We're going to be in a situation just like Europe was last year, 2 years ago. Whereas we dropped interest rates to zero, but now, next time it's going to happen, it's going to be even lower than what we had, just because otherwise they're going to create a depression. It's just the way the economy works right now, and it's going to keep happening, in my opinion. People thought that back in the 80s, they thought they would never see interest rates below 12% anymore. I've seen videos of people saying this, trying to predict the market and what's going to happen in the 80s. And when prices were like $60,000 for a house, right now it's $400,000 for a house. And they thought the interest rates were never going to go below 12%. Right now, people are saying the same thing. I don't think interest rates are going to go down, maybe in the short term, but in the long term, I believe interest rates are definitely going down, and they're going negative, which means on your mortgage, you might get a 1% interest rate mortgage in the future. Guess what's going to happen then? That's when I retire, because I'm saying, look, all my properties, refinance them all at 1%. I'm going to have massive cash flow on each property. Boom. That's going to be thousands of dollars coming in to your pocket every month from refinancing those properties. So that's my plan. That's, I think, what is going to happen in the market as far as the real estate goes and home prices. Let me know what you guys think down in the comments. I hope this was gave you enough information to kind of make a decision on what you guys want to do with whether you want to buy a home, invest in real estate or not. Also, if you haven't done so already, subscribe to this channel, as I will keep you updated on if anything were to happen as far as interest rates or some kind of data changes where it can influence the real estate market. I'm definitely going to keep you updated on this channel about it. And that's it. I'll see you in the next video.